Alaikum wa rahmatullahi wa barakatuh. Today we will continue our topic which regard to home financing. Before we already discussed about the home financing product, we comparing between the conventional and Islamic. We already also discussed as what are the related issues of in Islamic banking product for home financing. And we discussed also the case that broke to the court at the time between the Zulkifli and Afin Bank Islamic, right? So today, as the previous contract, Bay Bistaman Ajil has a lot of Sharia issues as well as a lot of problems in terms of the implementation. So we will discuss about what is the alternative product for home financing for Islamic banking entities. Right, so the alternative financing for home financing, which is widely widely used by Islamic banking in the entities worldwide, including in Oman, whereby Islamic bank they are using this kind of contract. What we call it as the diminishing musharakah or musharakah mutanaki. So, how this product is the modus operandi of the product is with if we compare to the Bay Bistaman Ajil, right? So if we make a structure of the product in order to make for you easy to understand, all right? Actually, the diminishing musharakah itself, it is kind of a contract whereby two parties they are partner in purchasing something, right? In IOF Sharia standards, this based on the Shirkatul Ainan, right? Whereby the one party jointly buy a property with another party, right? Whereby why we call it mutanakisa or diminishing? Because one party will purchase the shares of another party, whereby his share will increase, right? Every time of installment, and another party will decrease his shares of ownership for that particular underlying property, right? So in order to make you more clear this kind of product, let's say we make one example. All right, let's say this is the Islamic bank. This is the customer. Let's say the customer is Abdullah. All right, right. The price of the house, let's say, is 100,000 as usual, right? So in order to purchase this house, Abdullah will contribute, for example, 10%. The bank will contribute 90%, right? This 90% equal to 90,000. This 10% is equal to 10,000, right? So Abdullah and the bank will purchase the house, whereby the this house ownership will divided into their shares of the house, right? Because the Islamic bank has no intention to own the house, and Abdullah has the intention to own the house. In this case, Islamic bank will sell his shares to the property. So in this case, there is a first contract is musharakah, where they purchase this house based on Shirkatul Inan, right? Shirkatul Inan. The second type is promise to sell, right? A promise to sell from the Islamic bank, right, to Abdullah, that he will sell his shares to the customer, or Abdullah will promise, right? Here promise means wa'ad. Promise to buy the shares of the bank in this kind of the property, all right? And third, after purchasing the shares of the assets of the bank, Abdullah also will rent the shares of the in this house that owned by Islamic bank. So there is ijaro also element, but some Islamic bank they are providing this kind of ijaro contract, but some Islamic bank they are using only diminishing a standalone diminishing musharakah. All right. So not necessarily there is ijaro, but if it is ijaro, means there is a rental. But if there is no ijaro, means the bank will take the profit from the sale price of the shares of the bank, right? So this is the minimum requirements of having diminishing musharakah agreement. But sometimes there is also a wakala, whereby the customer will become the agent of the bank in purchasing the property. All right. Now, after diminishing musharakah agreement is signed, right? Diminishing musharakah agreement is signed. The bank will purchase the underlying assets. After purchasing underlying asset, as well as signing the promise where the customer will purchase the shares of the bank, and the bank will agree to sell his part of shares. All right. Then the customer will sign ijaro agreement and wakala. All right. But the wakala, implementation after purchasing the property. If property is not yet purchased, the wakala in ijaro agreement cannot be, signed, right? So this is the fourth contract that signed by the customer, right? So let's say here, for example, let's say here we divide the shares of the bank into three. So then this customer share, this is installment, this is a bank share, this is purchase price, this is selling price, this is selling price, this is purchase price, right? When the customer pay, for example, in the month 1, let's say for example, the banks and the Abdullah agreed to have this kind of tenor maturity is 90 day month, for example, which is more than 7 years or 7 years and half, right? Let's say for example, in the first month, the bank got purchase from the customer. He received, for example, 1,500, right? Sorry. Selling price. This is a rental. He got the 1,000, right? Selling price, and 500 is rental. Here, he will put 100 as a purchasing price. This is rental as 500, right? So for the first month, the shares of the customer will increase to, all right, 10,000. The bank shares will decrease to 89,000, right? Okay. Here we put percentage better. Percentage here 1,000. So the shares of the bank become 89%. All right, and here PP percentage become purchasing price is 1,000. So here the percentage become 11%, right? So here if we put again 1,000, right, 500, rental, here become 88%, here become 88,000, and here become 12,000, here 1,000, here is 12% increase in rental, right? So for example, after 40 months, like say 40 months, right? Here bank receive 500 rental, here 1,000 purchasing price, right? So the bank share already decreased into 40%, right? So here the remaining bank share is become 50%. Here is equal to 50,000, while the customers is become 50% of ownership, or 50%. This is 50k. This is 1,000. This is 500, right? So if the customer, fail to pay on the 40th month, for example, 41th, here, sorry, this is 40. If the customer fail to pay in 41th month, the customer shares is become 50%, and the bank shares remaining 50%. So how to calculate this customer shares and bank shares? So if customers already pay, for example, 40,000, so 40,000 you have to add the beginning of ownership is, which is 10, so the total is 50. This 50,000 you have divided into the price of the house, all right, 100,000. So the customer shares is become 50%. All right, the same thing like the bank shares, which is remaining 50%. So this become 50%, right? So 50%, 100 divided minus 50%. So this is remaining is bank shares, all right? So if I ask you how much the bank shares after 41th month, for example, the customer default in 41th month, so you have to say that 40 times of payment plus the initial shares of the customers. This is the shares of the customer divided by the price of the house, right? So the remaining of the the percentage is belongs to the Islamic bank. All right. So this is how to calculate the customer shares and the bank shares. All right. But other than diminishing musharakah, there is also other type of home financing contract that using other type of contract. But before that, why for me as customer, I prefer to have this kind of diminishing musharakah agreement with the Islamic bank, because me as the customer, I have the ownership in this kind of the house. In case, for example, now if we have the issue whereby the customer default, right, in the 41th one, the bank is not fully owned of this house, whereby we can sell this asset to the market. Let's say after 40 months, which is 3 years and something like that. After 3 years, the price of the house is increased. For example, the house increased to 150,000. Right? So from this 150,000, because the ownership of the bank is remaining 50%. So you will divide that 50% out of this 150,000. So 75,000 will go to the Islamic bank, and 75,000 will go to the customer, right? If it is less, we will you have to divide it into how much the market price at that time. So they will divide it into some kind of the percentage of shares that they have at that point in time, right? So the second type of home financing, but this is not quite used by the Islamic bank, is Tawarruq model, whereby the right? Let's see how this Tawarruq model is used for home financing. Before this one also used by one Islamic bank in Saudi Arabia, right? So how this Tawarruq? In Tawarruq model, we will identify the supplier, the underlying asset, what we want to deal with. Like say for example, supplier of, let's say, car, for example, right? But this is for house financing. What the Islamic bank do? He will buy the asset, right, a car which is equal to 90,000, right? After customer approach, right, the property developer, right? Here he will pay, buy the car for equal to 90,000. Here there is the ownership, and then the bank will sell this, car to the Abdullah, right, at 90,000 cash. Sorry, I will sell. Sorry, at 90. If it is 90,000 here, so he will sell at a higher price at 100,000. Abdullah will pay on installment, right? Installment, right? For example, in 10 years. After getting in a car ownership, Abdullah will sell, right, to the supplier, and he will get cash. In this case, he will use to purchase a property to developer, and then this is ownership, right? So the the contract of Tawarruq is done between Islamic Bank, Abdullah, and car supplier, right? Whereby between Abdullah and developer is a buy and sell property. But there is also that also widely used by the Islamic Bank, whereby it is Murabahah model. Where Murabahah model is this very straightforward, whereby so we are not having this car supplier, right? How they will do? First, Abdullah will identify the asset, right? Then this asset will Abdullah will approach Islamic Bank that he will purchase this kind of the property, which is equivalent to, for example, 100,000, right? So this 100,000, the price, sometimes the customer will pay some amount of down payment, but in some Islamic Bank they are not required to pay 10% down payment. Here, for example, it's not required. So after identifications of this property, what Islamic Bank do? The Islamic Bank will purchase this property directly from developer as identified as required by the customer. After transfer of ownership, all right, then the Islamic Bank will sell this kind of property to the Abdullah, right? Say for example, if he purchase at for example 100,000, the bank will sell this 120,000, but the customer will pay on installment, for example, in 15 years. So this is a Murabahah model, whereby the bank will tell the Abdullah that he was purchasing this asset is 100,000, that he will sell to the customer at 120,000, right? So in this case, the bank is informing the customer how much the price that he bought from the developer. So in this case, there is a wide promise in these three kind of contract, where undertaking a promise by one party to do or not to do certain actions in the future. So the promise of a party who promises to buy or sell, difference between one a contract, the former is one side and the other one, but this is not binding, and the other bilateral is binding on both sides. And so there is a question: is the promise legally binding or enforceable or not? the first group, like for example Hanafi, Shafi'is, Hanbalis, and some Malikis, the promise is a noble but is neither mandatory nor enforceable through a code of law. But the second group saying, like for example Samura, Jundub, Umar ibn Abdul Aziz, Hassan al-Basri, Ishaq, and so on, fulfilling promise and mandatory, and promise under moral and legal obligation to honor the promise. On the third group, for example, some Malikis jurists, promise is not binding under normal circumstances, but become binding where the promiser has the cause promise to incur a certain expenses undertake to work any form of liability. And fourth, Islamic fiqh academy, fulfilling promise is not subject to certain conditions. Right? What this condition is decided by Islamic fiqh academy. First, it should be one-side promise. The promise must have a cause of the promise to incur certain liability for the promisee to seek enforcement on the promiser. If the promise is purchase something, the actual sale must take place at the appointed time, but by the exchange of the offer acceptance, a mere promise itself should not be taken as a concluded sale. If the promiser back out of his promise, the court may force him to either to purchase the commodity or pay the actual damages to the seller. The actual damages include monetary loss, but not opportunity cost. All right, this is the stand of Islamic fiqh academy. So that's why if there is a difference between the actual and the, for example, if there is a security deposit, the customer has to pay the remaining. If it is less the actual loss, so the bank should pay back the customer. So and the last, we will discuss about the Taqi Osmani position on the promise. What he said is called tuja'al mawa'id lazima lilhajatin nas. So the promise can be made enforceable at the time of need. So argument of this is if the promise of resale has been taken before entering into an actual sale, it is practically amounts to putting condition to sale itself. Hence, the defective sales elements of Gharar issue is of two sales in one transaction. So the big difference is putting condition in the sale and making a separate promise without making its condition. If the sale without any condition, but the two transacting parties has promised to do something separately, then the sale cannot be held to be contingent or conditional fulfilling the promise made. It will be take effect irrespective whether not the promiser fulfills his promise. If one party breaks the promise, another can claim the actual damages, but this is actually not the opportunity cost. Lastly, which regard to Hamish Jiddiyyah, Hamish Jiddiyyah is defined as the amount paid by the order of the purchaser upon the request from the purchaser to make sure that the order is serious in his demand for the assets. Like for example, if the customer approaches Islamic bank, he has to make sure he is really intention to purchase the asset. If the order declines to purchase the asset, the actual damage incurred by the balance should be reimbursed from the Hamish Jiddiyyah. If it is not demanded, the balance should be asked from the order. If it is less, the bank Islamic bank should return to the customer. So IOFI Sharia standard on the Hamish Jiddiyyah, in the case of non-binding promise, the amount of Hamish Jiddiyyah is returned to in full, even if the asset is sold to another client at the lower price, then agreed upon by the client who was the original purchaser orderer. But in the case of a binding promise, the amount of actual loss shall be deducted from the Hamish Jiddiyyah. For example, Islamic bank shall not carry any losses. If not adequate or not available, any resultant loss to the Islamic bank shall be borne by the client for his failure to fulfill his promise, because this asset is required by the customer, not by Islamic bank itself. So the customer shall fulfill his promise. Otherwise, the asset can be sold to another party. But if any loss on that one, the difference between the original price with as well as the expenses during the sale, customer shall borne all that kind of the expenses. I think that is clear. We already discussed the whole concept of home financing Islamic bank, whether it is the old model and the current model, and the alternative. There are three kinds of alternatives, or maybe four types of alternatives, including Ijara Mawsufa fi Zimma. In this mostly done because the asset is under constructions. But for the asset under construction, for the contract of diminishing musharakah, normally the Islamic bank, they are using istisna model, all right, by combining istisna with the diminishing musharakah. I hope this is one clear to you. If you have any question, please do not hesitate to ask in the comment, or you can ask in the WhatsApp group. I hope you enjoy the video. If you have any questions, please ask. And thank you very much. Assalamualaikum warahmatullahi wabarakatuh.